This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending March 18th, 2023. Our question this week is, what is liquidity risk? The answer will be provided later in the video. This week, the market ended mixed. The Dow Jones Industrial Average decreased minus 1.19% on Friday and was down minus 0.15% for the week. The S&P 500 decreased minus 1.1% on Friday, but was up 1.43% for the week. The Nasdaq decreased minus 0.74% on Friday, but was up 4.41% for the week. Looking at the week, we can see that there were 8 up finishes versus 7 down finishes for the major indexes. On Monday and Wednesday, the Dow Jones Industrial Average and the S&P 500 finished down, while the Nasdaq finished up. On Tuesday and Thursday, all the major indexes finished up, and on Friday, all the major indexes finished down. New unemployment claims were at 192,000. The Consumer Price Index, that is CPI, increased 0.4% in February, which was expected. Mortgage rates tumbled to 6.57%. Mortgage demand rose 6.5%. Oil prices fell sharply to the lowest level since December 2021. Signature Bank was seized by regulators, and Credit Suisse will borrow nearly $54 billion from the Swiss National Bank to save the bank from default. New unemployment claims, the CPI increasing, mortgage rates tumbling, mortgage demand rising, oil prices falling sharply, a bank being seized by regulators, and a major bank, that is Credit Suisse, being bailed out by a major central bank are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is liquidity risk? Liquidity risk is the risk of a company incurring losses from not having enough cash to meet payment obligations in a timely manner. It includes the risk of making payments when payments are due and or from not being able to make the payments at a sustained cost. In the case of a bank, liquidity risk is how a bank may not be able to make its cash obligations when they're demanded, whether the obligations are from operations, investments, or depositors. The bank's liquidity risk includes its inability to return money to depositors when they demand their money back. Every depositor has the right to demand his or her deposits from the bank on a moment's notice. If it is perceived that a bank is having trouble meeting its cash obligations to depositors, the risk of the bank defaulting increases as more people may also demand their deposits back. More depositors demanding their money will cause the bank to collapse. Do you own companies that have high liquidity risks? Do you own any bank stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. and they taught you absolutely nothing about the U.S. financial system, you can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside Trading Watch List from the week ending March 18, 2023. The strongest performer on the list this week was Riot Blockchain Incorporated, ticker symbol RIOT. It's in the third column. It was up 14.89% on Friday and increased 52.83% for the week. Riot Blockchain is a crypto mining company that primarily focuses on Bitcoin and general blockchain technology. Riot has deployed approximately 8,000 application-specific integrated circuit miners at its cryptocurrency mining facility. Through its subsidiary, the company seeks to develop a blockchain-based escrow service for wholesale telecom carriers. Looking at a summary of results, you can see that Riot Blockchain has increased almost 139% year to date. I generated cash flow from Riot Blockchain as I have in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 ETF SPY. The Southside portfolio is up 26.52% versus 1.98% up for SPY, a difference of 24.54%. The Southside is beating SPY by more than 24.5%. The cash flow generated by the Southside cash flow system for this week was 3.9% of the portfolio account value. The account value changed by 17.36%. Meanwhile, the S&P 500 ETF SPY changed by 1.06%. Bitcoin Watch. Bitcoin gained 36.34% this past week, but it continues to be in a bear market. It is down more than 60% from its all-time high, which was achieved in November 2021. I sold option contracts on one position this week. It was a call that ranged from $0.00 to $67.34. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlist levels 1, 2, and 3, and they are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.